Hi, I'm Peter Rose, founder of Longwood Currency Trading. Is it dancing with dice or Forex trading skill? Is it a complete crapshoot or is it skill in your trading? What is it? We're talking about game theory here because Forex trading is a game and you can apply the rules of statistics and odds and all that other kind of stuff to it, even though there's a huge psychological factor and we have no control over. I mean, we can throw the dice and we can prey on them and all this other kind of stuff or whatever. We don't have any control over the Forex market. The only thing we have control over is our risk. So that means that we're really looking at, is trading Forex gambling or is it something else? Is it a skill-based thing like sailing a boat? Is it sailing a boat in a race gambling? No, there's skill involved in how you operate the boat. It isn't gambling. You don't gamble when you sail a boat. You don't gamble when you play football. You have your skill. So Forex could be gambling if approached incorrectly, though, right? By taking a risk. If you take a risk, like running out between two parked cars into the middle of the street without looking, that's taking a risk. But if you walk up to the edge of the cars and you look both ways and up and down and sideways and there's nothing coming and then you cross the street, you've assumed the risk. There's a big difference. And so is it dancing with the dice or Forex trading skill? How do we manage that? Because what I'm going to end up telling you is that trading is both gambling, taking a risk, and the assumption of risk. It's both. Let's look at the odds of life. Let's just look at the reality around us. Nobody wants to trade Forex and say that they're a gambler. They want to base it on their skill. But if you have poor education, then the skills that you have are no better than gambling. We can look at the odds of similar type things that we can do. Craps, backgammon, and chess are three that are representative of game theory. In craps, that's the you get the best odds in the casino by playing pass line craps. It's only 1.41% against you. If you stand at the table long enough, you're going to lose 1.41% of the amount of money that you bet. That's just how it goes. And the longer that you stand there and play, the higher those odds get because of the cumulative effect of that 1.41% negative balance against you. In backgammon, which is a dice game, you could say, well, all you're doing is throwing the dice and moving the checkers according to the number on the dice. It's like playing Monopoly. But it's not. You don't have any control over where you can move your pieces in a Monopoly game. You throw a 3 on the dice, you move 3. Okay, that's just, you can't get around it. And there's only one way you're going unless you got to go back and don't pass go. In backgammon, you have almost an infinite number of responses to any given move or situation. In chess, you've got about 640 different combinations of movements that you can make in response to a move. Backgammon is a little bit more complex because of the differential in the number of moves is relatively infinite in regard to the same movement of pieces that chess would have. In chess, you can move the knight pawn out as your opening move if you want, or a bishop pawn or something. I mean, there's a bunch of stupid stuff that you don't do because in the long-term reference of the game, they don't make any sense. If you're just learning chess, then you don't understand theory, you don't understand opening theory, what's good, what's bad, how to control the center, anything like that. So you're taking a risk when you play chess and you only know the rules. If you're doing the same thing in trading and you only know the rules, then you're taking a risk. You're not assuming a risk because you don't know how to assume that divergence from assumption to risk. You don't know how to do that. In craps, 1.41% against you. Backgammon, you do have control over the choices that you make in your movement of the pieces. However, every time you get thrown against and then you're going to counter move, you could change the whole tactical approach to what you're doing because the strategy changes at that point. If you're familiar with backgammon and you throw a 6-5, you can run the back runner out and stuff it up on that far point. But the point is, in backgammon, you have numerous things that you could do that are non-invasive to the strategy of where you're playing. When your opponent runs his piece out on a 6-5, your strategy needs to change a little bit because there's one less checker back there in order for you to hit and slow the guy down. So you have a strategic element in backgammon that you don't have in craps. You have tactical things that you can do in craps, and you have tactical things that you can do in backgammon, but you don't have strategic things that you can do in craps other than know what the probabilities are of throwing the dice. In backgammon, you're bringing your skill in analyzing the situation despite the randomness of the dice action. In chess, you would think, because it's the pure strategic game with all open information, just where the pieces are, you have all the information. It's not like in playing poker and you've got two cards in your hand and you're looking at the flop and nobody knows what your two cards are. You don't have that in chess. It's open. Information is available to both players. So how do you work a strategy against that other guy when he knows what that strategy should be? And if it isn't that strategy, he knows he's got you. That's why a grandmaster will kick anybody. A master, a good player, will decimate a mediocre player as long as you know 3 of the basic openings and a couple of responses to each one of those 3 things. So you've got about 6 different opening parameters that you need to know. And you need to know them down to about the 12th move. In the master level play, they know dozens of openings and dozens of responses to those openings. So the matrix becomes really complex. And they know those moves, those openings, pairing back and forth 6 to 10 moves down. Because those games have been played out hundreds of thousands of times, not only in real life play, but also in the backgammon bots that are out there that will run through that stuff and say, well, you've got a 0.05% chance that's a better move over this other one. A 0.05% chance that this one's better than the other one, but you have 20 or 30 moves in sequence and you'd multiply 30 times 0.05% and you get a significant advantage if you can take advantage of those small moves. But if you don't know those and you get off of that, I remember I was playing chess at the Boston Chess Club. This is 40 years ago, and I remember playing chess with this guy, and he goes, "Oh, you shouldn't have moved that way." And I go, "Why?" And he goes, "Oh, well, that was a game played in 1932 by blah and blah, and 6 moves later, you're gonna end up not being able to castle to the left side, which is where you want to go because of where I'm coming, and so you're screwed in about the next 5 or 6 moves. You want to call it a game, or you want to continue on?" I said, I don't understand what the fuck you're talking about. Let's play the game. 6 moves later, I was in the ass. That's it. So you need to know a lot of stuff in order to play chess, in order to compete. So it would seem, therefore, that the amount of information that you would need to know in order to trade currencies, in order not to be dancing with the dice, but having skill, you would have to have almost an infinite amount of information. But if you have an infinite amount of information, then how are you going to figure out what to do? If somebody sat you down with Reuben Fine's old book, Ideas Behind the Chess Openings, and you read through a couple hundred pages of that with 40 different openings, and you look at all that and try to memorize all that stuff, and that's all you know without actually ever trying to play across the board in real time. You can remember all that stuff, but it won't do you any good in playing in real time, because playing in real time is different than reading a fucking book. And trading currencies is the same thing. You can read all the books that you want, listen to all these talking heads and videos and stuff, and it won't do you any good because it's information. I try to provide the information, but I try to filter that information into what I call relevant nodes of that information, and then try to show you how you can apply that. But that still doesn't teach you how to trade, because that's taking one particular scenario with certain keynodes of information, and they're following parallel path of success in 3 or 4 different directions, just like a chess movement, in what could happen if you take your order at this price as opposed to taking it at that price, and you go in with 2 lots instead of going in with 4, and instead of looking at the non-farm payroll event, which is supposed to come out tomorrow, you determine that maybe yesterday's PPI is more important. You have so many different variables that are involved there. Remember, if you have 5 different things that you're looking at, pieces of information, let's call them conditions. If you have 5 conditions that you're looking at, or 5 confluence of information points, day of the week, the time frame you're on, number of lots that you're trading, spacing between the lots that you stage, and entry characteristics or whatever. If you have just 5 conditions, you've got 325 different permutations you can arrange those combinations in. If you have just 3 pieces of information, you have 21, I think it's 19 or 21, I forget what it is, 19 different permutations you could put those 3 conditions in. So not only do you have a lot of information, but you have an infinite number of permutations you can put that information in. Even 2 conditions gives you 4 options, 4 different permutations. So if you're trying to learn everything that's out there, then you are limiting your ability to trade, because you don't understand what's important to look at, and then focus on what's important for you to look at as a beginner trader, what's important for you to look at as a intermediate trader, someone who might have a couple of years of trading, or 300 or 400 or 500 trades under all kinds of different conditions, has done tried position trading, a little bit of swings, some scalping, some day trading, mixing it all in together in order to get the full picture of the thing, of experience trading multiple pairs or whatever, and then saying, okay, I've had this set of rules and they work particularly good under these conditions. Why don't they work under these conditions? Well, I want to be able to work under those conditions, because a day trade could very easily turn into a carry trade, right? So you've got a different condition to deal with on that carry trade. But plus the fact that if you're trading with a large lot size bank position, you may want to stage in to that trade. And that brings up a whole new matrix of information that you need to choose from, if you don't know how to filter that down. If you don't know how to filter the information down, then you're gambling. You're taking a risk. You're not assuming a risk, because what are you assuming? You're assuming all the information, but all the information is not relevant. A piece of information that you think is relevant may be relevant, but not in this particular phase of the life cycle of a currency position. I mean, that's why I had to make things as simple as I did. I used my 33-year career as a software engineer designing complex enterprise-level business applications. And you don't solve those problems by looking at an infinite amount of information. You have to break the problem down into small pieces and solve each one of those small pieces. So that's what I did with the life cycle of a currency position. It's a rip against the software development life cycle, the SDLC. And that simply says that you, in trading, you have entry analysis that you need to do, position management, and exit methodology. You have rules for each one of those, and each rule has conditions. And each rule is in sequential order, and each condition within each rule is in sequential order, so you don't get screwed up in all the permutations of a complex, disparate system. So if you don't understand that, how are you going to learn what to learn so that you are assuming a risk rather than gambling and taking a risk? Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.